What's good? What's good? What's good, people, traders, and dedicated gold chasers? Welcome back to another video with your boy Marcy at the Modern Day Trader. Now, today, as you guys can see by the title, we're going to be doing a little trade recap of the trade that I took on Tuesday into Wednesday. Now, bear in mind, I didn't trade on Wednesday because there was red folder news. There was no trades at all, right? So, with that being said, we took a big trade, like my biggest trade ever so far. So, and we have good news too, but just watch until the end to make sure that you catch the good news that, or from this trade, what happened, right? Okay, without further ado, let me just share my screen. Let me share my screen and we can jump straight into this breakdown. And here we go. Okay, so initially we had on this day, so it was Tuesday, so we had the daily being bullish, right? Then we got to the chart and we were looking for trades in the London session, right? We got to the chart on Tuesday and we basically, at this point, you're looking at what the 4H did. You find that the 4H is bearish, right? So now the only other option is to find if we have 4H correlation. So you're going to go through all pairs to see exactly what has happened. So you go through, you see that pound USD is bullish. Okay, so that doesn't count. EJ bearish. There we go. Now we have two pairs. CJ bearish, 3 pairs. UJ bearish, 4 pairs. AJ bearish, that's 5 pairs. So we have something called 4H correlation, right? So then after that, what you're going to do essentially is you're going to be dropping down to the 15-minute and anticipating where price action could potentially either break out or come back into a point of interest to then take sell trades, right? And I had my two levels, and I remember on Tuesday when I did my analysis on the live, I basically showed you guys that we had the push to the upside, we had a pullback, we had a break of structure, then we had another break of structure on Monday. And then I mentioned we're making internal structures. And for sales, we could either catch the breakout of like one of these higher lows on the internal structures, or we could catch a push to the upside. And then from this point of interest or double top area, we could see the meltdown. Now, what did I do? When price action got into this area right here, what I personally need is like there's 2 steps to this. We need price action, actually 3 steps. Step number 1 is for price to actually get into the point of interest. You need price action to get into the point of interest, right? Then once that happens, you want to scale down to the 1 minute and just identify where 1 minute structure is around this point, right? So you can see that I have multiple breaks of structures here, just denoting what actually happened. So initially you can see that we had the push to the upside, forming a high. We had a pullback right here, and then we had a push breaking that structure right there, forming a new higher low, which in turn then meant that this was our new higher low that formed this higher high pattern. And when that broke, we had a shift of structure essentially, right? However, what then happened is that price action moved to the upside again, meaning now that we formed a new high. So we're back bullish, right? So we need price to basically close below this area on the 1 minute before we can even anticipate sell-offs, right? So step number 1 is obviously for price from a 15-minute perspective to get into the point of interest. Step number 2 is to have the breakout of 1 minute structure. So we got that break of 1 minute structure. Step number 3 is to go back to the 15-minute after you get the 1 minute structure break and to wait for the 15-minute candle to close after 1 minute structure. That's very important. Now you get this candle closure right here, and what you're going to do now is essentially you are going to be going back down to the 1 minute. You're going to mark where the new low is, because obviously we would have broke structure already, form a new low. Now your anticipation is that price action should pull back, create a wick, and then continue to the downside, right? And that shows clear It shows clear intent that we're rejecting a point of interest. And the reason why I've put these like strenuous processes and conditions into the plan for entry or from points of interest or double tops and double bottom areas is just to know that price action is actually going to continue in the trend, because remember that this is a very deep pullback or a very deep correction right up into the last known higher low or lower high in a trend. And since that had happened, there's a high chance that price could just break the trend and then basically switch the trend, right? However, that's why we have the steps in place to just note what we need to do. So we then mark our low, we mark our potential lower high if price action was to break this. We take our sell stops in and around number of 187 700. We have a 15 pip stop where our stop loss is placed at 187 850, 2 pips above this high right here. And you can see price action triggered me in, pulled back, and then we went break even on this push. We had a little bit of a pullback, then we pushed down, and we got a 24.67% trade, bro. But it wasn't as simple. Let me just take a sip of coffee. It wasn't as simple as just taking a 24.67% initially. So my initial plan says that I must take profit right there, right? Where 15 minute where 15-minute structure is immediate 15-minute structure, right? Now, why did I not take profit in and around that area? Let me answer that question for you. Because if you come to the 4-hour time frame and you look at this 4H that pushed down from these highs, right? You can see it's an engulfing 4H candle. You can see that we closed below an area where we failed to close below for 4, 8, 12, 16, 20 hours. We failed to close below this area for 20 hours, and then we finally closed below that area, right? So when I saw that initially, and this was at 3 o'clock South African Standard Time, when I saw that initially, I then came to the daily and I looked at the daily candle and I said, if the daily candle can potentially close below this area here, then there's a high chance that the next daily candle will continue. And I pretty much saw the daily candle closing below there, right? Then you come into the weekly candle, and at that point, the weekly was basically flipping bearish. And I looked at it from a perspective of structure on the weekly time frame. You can see we had a shift of structure right here. We had a pullback. We have a strong bearish candle that basically shows intent to push to the downside. And at this point, all we did was create a wick and we hadn't pushed to the downside. So my anticipation is that price action should then continue pushing to the downside. And I thought that there's a high chance of price action potentially filling this wick, but I don't need price action to fill the whole wick. So I was like, okay, let me look at the daily to find an area in the market where price action could like struggle, right? And then I just basically placed my stop at the round number 100 pips above that, which is 184. And yeah, guys, like, and then my another one of my theories was the fact that I'm not trading on Wednesday. Bear in mind, I took the trade on Tuesday. The fact that I'm not trading on Wednesday, and due to news, I was thinking that if the daily candle closes bearish and the 4H candle before my trading session closes bearish, then I'm anticipating the price action should then continue bearish. So why not just leave the trade open and continue trading than to not do anything, essentially? So that was my trade, 24.67% and a whopping 370 pips, bro. Like, can you fathom? Can you fathom exactly? Like, at me, I'm not gonna lie, I can't fathom, bro. I actually can't fathom that 24.67%, bro. Imagine, like, I've never done that in my life before, and I'm not even gonna front. I've never taken a trade this big before in my life. Now, this is just due to changes, like simple changes to my trading plan, like being able to extend the double top, double bottom entries or points of interest entries to 15-minute highs, or really just having the knowledge behind how a pair moves and like exactly what it does in order to like get there. And what I mean is, I understand when the distribution of pound yen occurs. It generally occurs over Tuesday or Wednesday, and this usually happens after a high or low is created, and then price action starts moving in your intended direction. You will see 2 days of like clean movement to that direction. Now, before I actually show you guys what I want to show you at the end, let me just get into potential trades for today, right? Let's clear the chart because we need to forget about whatever happened yesterday and the day before. We need to clear the chart and you need to come to the daily. So the daily is bearish, right? What we can then see now is we're either going to have the daily and the 4H green, but clearly you can see today is pushing bullish. So there's a high chance that this the 4H for this session is actually bullish, right? So let's see. We go to the 4H, you can see, okay, it's bullish. In the next 10 minutes, this thing's not going to flip bearish. So we can't trade daily and 4H, and we can't trade daily 4H plus 4H correlation because we just don't have it. So now you're going to be looking at all the other pairs for correlation and see if they're all pushing bullish, and that speaks to the sentiment in the market. So let's just check the sentiment and the feel in the market. You can see that pound USD is bullish too, and if it closes like this, that signifies that we have a strong chance of the pound being pretty strong, right? So if the pound is pretty strong, then there's a high chance that price action could continue pushing to the upside. Now you're looking at the yen for weakness essentially. So you can see EJ is bullish, CAD JPY is bullish, UJ is bullish, and AJ is bullish. So we have a bullish sentiment across all pairs, right? And with that being said, what that means is pound is bullish, JPY is bearish. So now there's a high chance that the next 4H candle will potentially push bullish, right? With that being said, let's just check the I just want to check what my numbers are saying for bullish uh, for bullish 4H correlation today. Today is Thursday in the second week of the month. So we just go to uh, our sheet that we created and we take a look at Thursday. Okay, I can tell you guys that according to my breakdown on the Excel, there's 100% chance of us actually getting a 4H bullish candle. So now we know we can move forward with 15-minute analysis, right? So looking at the 15-minute, right, just based off from what I had yesterday, I know that here is a break of structure right here. We mark that as a bearish break of structure. We then have this as our previous lower high that formed this lower low right here. So what we can see is that we had a bullish break of structure essentially. And now what you're looking at is price action potentially continuing market structure above this level here. So personally to me, what I would want is for price action just to close right below here, have a pullback and then a continuation to then take price action to the upside. So I'm going to need a 15-minute close above this level before I can even do anything. And bear in mind, I can also only trade 30 minutes into the 4H candle. So if we do just break to the upside, I would like a level to be created in the market to then see the break of that level and then the continuation of that level, right? And that's what we're looking for. We're looking for pretty much that's pretty much it. And otherwise, the only other plans for to break above will have a point of interest around this area right here, which is a pretty huge point of interest. But we need price action to first break above that level, right? And that's about it. Do you guys have any questions for the analysis? We're pretty bullish. We're looking for buys today. And yeah, we're looking for buys based on 4H correlation. We have a pretty high chance that the next 4H will push to the upside, like a high chance. That's what I can say. We have a very high chance. Now, the last thing that I wanted to get into was, and thank you to the person that stayed, but the last thing that I wanted to get into was pretty simple. I have really good news to share with you guys based off from that based off from what I showed you guys, right? I want to show you something. I just want to show you a little something, bro. Just something small, something very, very small but big at the same time. Boom! Let's go. Let's fucking go. That's what the 24% it did, bro. Let's go. I passed my challenge, bro. It's only phase one at the end of the day, but we passed it. We passed it. We passed it. So now we're on to phase two, and we're looking forward to taking the trades, being as disciplined as possible. Now the 100K is still on minus 3%, 3.9%, 3.7%, something like that. But we did pass the FDMO account. And just because I didn't take that trade on the 100K, because it wasn't extremely high probability like today's trade would be. But yeah, I am looking forward to taking trades today. And I'm really fucking chuffed about this. So guys, from your boy Marcy at the Modern Day Trader, I hope that you have a lovely day. I hope that you have a profitable day in the week of in profit. And just remember, and don't forget. Remember and don't forget at the same time. It's the same thing, but anyway, your unmatched perspicacity coupled with your sheer indefatigability makes you a feared opponent in any realm of human endeavor. And from your boy at the Modern Day Trader, peace out, man.